Good evening, everyone. Welcome. My name is Neal Bawa, and I'll be your host tonight. This is a MultifamilyU webinar, and at MultifamilyU, our goal is to bring you all of the different resources that you need either to passively invest in the multifamily space or to actively invest in that space using other people's money. What I'm fascinated about today is that we are bringing you Scott Maurer from Advanta IRA. Advanta is really one of the best self-directed IRA custodians in the US, and they can benefit our audience in both ways. We have a huge percentage, I think about a third, maybe even 40% of the total amount of money that we raise to buy multifamilies come from IRA providers. Well, they come through IRA providers such as Advanta. And on the other hand, if you're looking to do active projects and you're looking to buy a property and maybe it's a $3 million property and you need $1 million for that property, I would bet that if you knew how to do it correctly, at least $400,000, maybe $500,000 of that money could come in from someone's self-directed IRA retirement plan. So the power of self-directed IRAs, both to be active and passive in real estate, is absolutely incredible. And so it's really great to have folks like Scott that are experts in the industry and really understand how this space works. So please welcome our guest speaker, Scott Maurer.
All right, thanks, Neal. And I think you teed it up perfectly what we were going to talk about tonight. And when we talk about self-directed IRAs, a lot of times when we're meeting with individuals or we're out networking, a lot of people internalize what they're hearing and really project it themselves and thinking, okay, self-directed IRAs, okay, do I have an IRA? Do I have a 401k? Could I use this money or that money? But we like to really think beyond that. So it's not always just about whether we were talking about self-directed IRAs, whether you have an account, but if you are someone, as Neal said, looking to raise capital, using other people's money, that's kind of I think the bigger picture way to look at self-directed IRAs as well. So it's not so much as, do I have an IRA account that I could use for this investment, but do my investors and the people I'm talking to have IRAs to use in my investment? So we're going to kind of touch on both of those aspects during today's presentation. So I'm just having trouble with the slide here. Oh, there we go. So again, my name...
Scott, I just wanted to jump in and answer a question that multiple people have asked.
Sure.
Yes, this presentation is being recorded, and tomorrow, right around noontime, you'll receive an email from us with a link to the recordings. Just in case you need to hop off, you will have a full recording tomorrow. Go ahead, Scott.
Yep, good deal. So yeah, just a little bit of background about myself for those of you who are not familiar. I've been with Advanta since 2006. By education, I'm a licensed attorney, although I don't do any legal work for Advanta clients. But you can see when I started in 2006, that was really the height of that first real estate boom right before the crash, when people were looking to buy whatever properties they could, get their hands on, as many rentals or rehabs, and they were looking to IRAs to do it. So I started at that time. I was the fourth employee of the company. We now have close to 25 employees working full-time for us, both at our offices in Tampa and Atlanta, and we certainly work with clients and individuals all over the country. In fact, I was just working with a gentleman today in California with a number of different investors for one of his private funds that he was raising. But yeah, that's my legal background. I spent most of my time at Advanta in the last few years really educating, talking to people about self-directed IRAs, what you can and can't do within the accounts, and helping really to foster that information and knowledge throughout the community and strategic partners to really just raise awareness of what self-directed IRAs are. Now, just a quick disclaimer, some of the things we don't do at Advanta IRA, even though I am an attorney, we do not provide legal, tax, or investment advice. And we don't endorse any products and we're not affiliated with any other company. So what that means is if you're looking to make an investment, whether you're buying that house down the street or you're looking at investing in a multifamily project, it is completely up to you to do that due diligence on who you're investing in and what the investment is in itself. We are not going to approve or disapprove of an investment necessarily if you bring it to us. Our role is to make sure that the investments get properly titled, that you sign off on the paperwork. But again, the due diligence is completely and 100% up to you. And again, as far as the legal and the tax aspects go, a lot of times we will talk about legal and tax issues when we do educational seminars, but when it comes time to make a decision, should I make this investment from a legal perspective or from a tax perspective, you need to refer to those individuals, those professionals in the area to get that answer. We can certainly refer you to individuals to help you, but again, that's just not something that we do at Advanta, and honestly, there's nothing. It's something that no self-directed IRA provider does. So now, just a quick information about Advanta. We've been around for over 15 years. We have over $1 billion in assets in the industry, holding, again, a lot of different things you can hold in a self-directed IRA. We'll cover many of those things briefly. Of course, we're focusing tonight primarily, though, on the real estate and the multifamily space. What we try to do, we really focused a lot in the last few years, is really offer a very top-notch personal service for all of our clients. We assign every new account to an account manager. That's one person who will help you regarding your account all the way from the process of getting the account open to making all of your investments as well. And where that really benefits people who are looking to raise capital in situations where you are going to potentially have 4 or 5 investors for each of your deals using an IRA account. We will put all 4 or 5 of those individuals with the same account manager, same person, who gets to know you and gets to know your investors, understands your paperwork, your PPM, your syndication documents, and really makes the process that much simpler, both from our perspective, from the client's perspective, and ultimately, if you're the one raising capital, hopefully from your perspective as well. And we do focus a lot at Advanta as well, not only on the customer service aspect, but the educational aspect. The class we're teaching here tonight, a lot of the events that we do, we bring in a lot of different speakers. We did something with Neal a week or so ago where Neal was talking about the multifamily space and what you need to know about that. We bring attorneys, CPAs, other investment advisors on in our webinars, in our live seminars as well that we do at our offices. Really, our goal is to educate people regarding self-directed IRAs and all of those issues really that are ancillary to that as well. So much of what our clients invest in is real estate and in so many different shapes and forms that a lot of our webinars, a lot of our guest speakers are really geared to that particular investment space. So I'm sure many of you on the call have heard of self-directed IRAs before, but maybe let's think back to either when you hadn't heard of it, or maybe obviously some people here maybe have not heard of self-directed IRAs. But in large part, why isn't the general public more aware of self-directed IRAs? And I think the biggest reason, most people have their IRA, they have a 401k account that's held with a bank. It's held with a brokerage firm who is only offering them the investments that they sell. If you go to a TD Ameritrade or an Ameriprise and you're looking to make investments, your only options are going to be those investments that they've vetted and that they're willing to hold, and basically that they make money on. IRS regulations are very broad when it comes to what you can and can't do, and we'll cover some of that a little bit later in the presentation, but most people haven't heard about it because they're not looking for it. You have an IRA, again, in a brokerage firm, they offer you different investment products. Most individuals don't think to ask beyond what they can do in that particular account. What are my other options? Not what are my other mutual fund options? What are my other options besides mutual funds or besides stocks? And that's obviously the people who are on the call who have heard of self-directed IRAs. You've asked that question already, or maybe someone has brought this idea to you. And again, if you're out there looking to raise capital, you should be bringing this idea to your investors and to the people that you're talking to, because again, the person who you're talking to wants to make an investment and understands they have to have $50 or $100 or $150,000 for an investment, just may not have that money sitting around in a savings account, or maybe they don't want to touch their savings account. And they think, oh, well, I guess I'm missing out on this opportunity. They don't know that they could simply tap into their IRA, their 401k account. And that's why this is so huge. It's not about necessarily whether you've heard about it, but the people you're looking to raise capital from, the people you want as your other investors, how come they haven't heard about it? Again, the most common reason, simply the banks and brokerage firms are putting up that wall and they're not allowing for it. Again, they could, they simply choose not to. But
Well,
the people
Scott,
who, yes.
I wanted to give a tip. I know that there's a lot of my students in here that are looking to raise money, looking to raise capital, and I wanted to tell you just how successful we've been. We ask this question from every single investor or potential investor. We tag it on our database. And when those people ask us what self-directed IRAs are, we we actually talk with them about it. And sometimes their company won't allow it to be rolled over into a self-directed IRA. We continue that communication and we bring people like, like Scott in on an ongoing basis. I've had people call me a year after we started the relationship and said, oh, that webinar that you do, I remembered it, and my employer didn't allow a rollover, and now I'm leaving my job and I'm rolling over the money. Can I invest in your next project? So the power is absolutely intense. And I think that at last count, we had taken about $7 million of IRA money.
Yeah, and that, again, that's what's so huge. Again, it's, as you mentioned, sometimes you may not have immediate access to it if it is a current employer's plan, but any IRA, any old 401k account, once you leave an employer, that certainly is available. And again, I think that's what, there's so many people, especially this day and age, that do change jobs, and they have that old 401k that they left behind, and in the hustle and bustle of moving to a new job, maybe they're moving cities when they move a job, they just forget about that old account that's just sitting there, not being attended to, that they certainly could be used for a particular investment. And so when we're talking kind of why do people choose to self-direct, I think in general, the people, obviously I've worked with over the years and Advanta's worked with over the years, people fall usually into one or more of the following buckets. For many people that choose to use their IRA for an investment, it's simply a new source of capital. So again, if you're out there looking to raise capital for your next project, and you're talking to individuals, say, I'd really like to invest with you, but I've already used my savings in the last investment I did with you. I don't have anything else to use. When they know and find out they can use their IRA account to make that investment, the IRA, the reason they do it is simply, oh, this is another bag of money that I can do. I don't want to miss out on this next investment. I'll use my IRA to make that investment. So for some people, it's just the decision to use that bag of money as opposed to a different bag. Obviously, increasingly over the years, stock market fatigue is something that a lot of people that we talk to are facing. They're tired of watching the stock market go up and down. I mean, we had some huge losses just a few days ago, and now the last couple of days we've seen some increases. And it's for the average person who has that type of an account, it doesn't make sense to them. Why is the stock market continue to go up and down? I'm employed. Everybody I know is employed. The economy seems to be going well. Why is my 401k, why is my IRA keep taking a hit when it seems like everything's going well? Geopolitical events are affecting their 401k, their IRA, and so they just get tired of it. They're looking for something else to invest in that is not subject to that roller coaster of the stock market. And certainly for some individuals, there's the tax benefits. When you invest in an IRA account, all of the benefits of that investment, whether it's you're getting rents, you're getting dividends, profits from your investment, they all come back to your IRA, either tax deferred or tax free, depending on the type of IRA that you have. So if you're someone who's in a high tax bracket now, or your investors are in a high tax bracket now, they might want to make that investment with you using an IRA account. If there's a potential for a lot of gains coming back, that they simply say, hey, I'd rather just keep that money tax deferred or tax free at this point. I'll worry about the tax impact later, but let's do it through my IRA account so I don't have to worry about it right now. And people who self-direct, really, it's you have white collar professionals investing in startups, you have everyday real estate investors buying that fixer upper down the street. So depending on why people are self-directing, it includes people from all walks of life choosing to take control of their retirement account. Now, the types of IRAs the types of accounts, I should say, that can be self-directed. Any type of IRA. You have your traditional IRAs, your Roth IRAs for individuals. If you're self-employed or you work for a small business, you have your SEP and your simple IRA accounts. And also the individual 401k plan. That's a huge plan, especially for individuals who are more active in the real estate business. And you're looking to defer a lot more money away each year and increase their contributions. The individual K plan gives you the biggest bang for the buck. So if you own your own business, you don't have employees, the individual K or a solo 401k plan is definitely a way to go. And again, the one accounts that get missed and forgot about a lot are those former 401ks, the 403bs, 457s, the TSP plans, all those qualified plans that you have from an old employer you used to work with or work for. Once you leave, as Neal said a minute ago, once you leave, whether you're retiring, you quit, you change jobs, you were laid off, once it's a former plan, you can simply roll that money into an IRA account and then open up your investment options. The one account that you will have difficulty at times self-directing is that current employer's plan. When you are working for the company currently, they can restrict your ability to move money while you're employed there. Although it doesn't hurt to ask. Every now and then someone will have a plan where they're allowed to do something on an in-service basis while they're still working there, do that transfer or rollover. So another key thing that people, when they're talking to their investment advisors especially, they go to their investment advisor and say, hey, I need to move some money from my account with you into this self-directed IRA. I'm going to be investing into real estate or a multifamily project. Sometimes people get scared off that this, the investment advisor says, oh, that's going to be taxable to you. You're taking money out of your IRA. You're taking money out of the 401k. You're going to buy real estate. That's going to be a taxable event to you. And unfortunately, a lot of those advisors just simply don't understand the mechanism for what's being done. So if you have money in an IRA, you have money in an old 401k, you can either do a transfer from IRA to IRA or a direct rollover from an employer's plan like an old 401k into an IRA account anytime you'd like. And as long as the money never touches your hands, that money is going from one retirement account to another. It's a non-taxable event. This is not you pulling money out of the account into your bank account to then use as you wish, which would be taxable. This is you moving money from one retirement account to another. It's not touching your hands. It's the same principle as moving money from Fidelity to Schwab or Schwab to Mass Mutual or Mass Mutual to Advanta. As long as you're not touching the funds, you're allowed to move it between providers. And again, that's something that gets lost every now and then when you're talking to your financial advisor, that they just simply don't understand what you're looking at doing. You're choosing, when you choose to self-direct, you're choosing to simply put your IRA in a different type of IRA account that will allow you to invest in a lot of different types of assets. It's not that you're taking the money out to pay taxes and go do what you wish with it. It is simply making different investment decisions. And you can transfer and roll over money as often and whatever you would like in an account. As long as it doesn't touch your hands, no tax consequence whatsoever. So I'm going to run through some of the types of assets here. I'm going to kick it back to Neal here in just a moment for a few things for him to add. But as far as the types of assets that you can buy in a self-directed IRA, so much of what we do with Advanta is real estate related, whether it's single family homes that people are buying for rentals, rehabs, people doing private notes and mortgages, mobile homes, the tax liens. Whatever you can think of to invest in real estate, you can do through a self-directed IRA account. And obviously what we're seeing a lot more of these days, and I can tell you there's been a huge increase in these types of assets, is really the real estate syndications, the private placements that are tied to commercial or multifamily properties, where people are not necessarily looking to buy that home down the street to hold in their IRA account. They just want to be part of a much bigger project where they're more hands off. And again, the common thread that these assets have, brokerage firms don't want to hold these types of assets in a retirement account. They could if they want. Again, Schwab could decide tomorrow to hold real estate within their IRA portfolio, but that's not something they're going to do because it doesn't make business sense for them. They want to sell mutual funds and stocks. They're not equipped by any stretch to hold these types of assets. We see a lot of paper assets, mortgage loans, tax liens, et cetera, assignments. Again, a lot of these types of assets that are tied to real estate in some form or fashion. There's a lot of other alternatives as well. So just kind of giving you the full picture of what a self-directed IRA is. Again, it's just all these different types of assets, the things that are outside the norm, things that are private, things that aren't available with the click of a mouse necessarily to purchase when you sign into your brokerage account. We've seen people investing in cryptocurrency lately, private stock of startup companies. Again, common thread in all of these assets and all these industries is that brokerage firms and banks don't want to hold it. That's why companies like ourselves exist, to give you that flexibility and give you that type of control. And I guess before we move on here, Neal, I'll just kick it back to you.
Sounds good. Thank you. I just wanted to share, and I'm going to share my screen here in just a second, an opportunity for those of you that are actually interested in passive investments. We have one that is a terrific investment in Buffalo, and we have projects like this usually 6 to 7 times a year 4 times a year. They are for non-accredited investors, and about 6 times a year for those that are accredited investors. Now, this particular project is for accredited investors, but for those of you that are non-accredited that are looking to invest with their IRA projects, IRA money, there are projects like this. There's both projects which are over 95% occupied and cash flowing on day one, and projects like this, which tend to be higher return, but typically would require about 2 years before you started seeing returns. So this one is a 322 unit graduate housing project in Buffalo, New York, near the university. And we're projecting now, this number is wrong. Based on recent loan quotes, we've now increased that number to 26% annualized simple return. That's not IRR, annualized simple returns over a 45-month time frame. This is a very advanced project. 50 investors invested $6 million in this last year. And so we went through all of the risky portions, the entitlements and having the tenant leave and demolition, all those kinds of things. And now we're inviting a smaller number of investors, about 30 or 40 more investors, to come in and join us so that we can get to the construction phase. Remember, we are anticipating a recession in 2020. This property will be ready to fill in 2020. Guess what happens to student housing when there's a recession? Well, enrollment at all major universities in the United States goes up. It spikes, and it spikes very significantly. So we think that the timing is really awesome because we will have this completed around April or May 2020. So if you're interested in this project or in any of our other projects, please reach out to us. For those of you, and I know there's a number of you on this call that are interested actually in using IRA money to buy multifamilies and become financially free, we teach people how to invest in apartment buildings. There's hundreds of students that come in each year and learn exactly how to invest in apartment buildings. And the reason we teach this is because multifamily has been one of the best asset classes for long-term wealth accumulation. And I teach the last honest apartment boot camp in America. Honest because it meets these 3 promises. Number 1, it is the only one where the training is very eye-opening, very specific, very tangible, not fluffy, not a lot of death by PowerPoint, but it's all about the use of specific tools that you can begin putting into practice right away. And it's not just information for new investors, but I've had students who have been in the industry for multifamily for 10 years, have paid more than $50,000 for education, and were blown away by the content that we provide. Second, most importantly, the training is entirely pitch free. There's no upsell, no coaching, no mentoring, no tapes, no salespeople in the back of the room. You will not be asked to pay for anything after this boot camp. This is a true education only event. And you can see that student after student says, lots of content, no sales pitch, all training. This boot camp was 100% sales speed training on how to buy apartments. And then the third piece is that it is filled with technology shortcuts that I've invented myself, secrets and strategies that you've never seen before, even if you've paid $50,000 for education, real estate in education. How to use virtual assistants to find properties, how to use mega marketing to drive tenants to your properties, and hundreds of other strategies like this, very specific, very tangible. Sosa, for instance, has attended 5 different boot camps. He liked this one the best, and he mentioned that he was able to immediately implement the strategies that he learned. And I'm going to skip past what you learn in the boot camp. I invite you to go to multifamilyu.com, click on the boot camp page, and right now the pricing is much lower. The boot camp's a couple months from now. The coupon code GRATEFUL will get you both the early bird pricing and $400 off the early bird pricing. You'll be paying 10% or less of what other people are charging for events such as this. And that's because we believe in the power of networking. A lot of our students come back and give us properties. So we have a business model where we benefit from them later. So check out the bootcamp at multifamilyU.com. And if you're interested in passive investment, please come back to me and connect with me. My email address is neal@multifamilyU.com. That's NEAL. And I will also give that to you at the end of this event. All right. Back to you, Scott. Just click the green button.
All right. Thank you very much, Neal. Let me get back into our slides here. So again, where we left off was talking about all the different things you can invest using a self-directed IRA, and I think a lot of times it's one of the important things that most people don't realize is that the IRS, people get the question, how long have I been able to do this type of an investment in an IRA account? How long have I been able to buy real estate, buy crypto, et cetera, within an IRA? And the reality of the question is, the answer is, the IRS has been allowing it ever since IRAs were created back in 1975. In fact, the IRS at the time simply said, well, rather than making rules about all the different possible investments that are out there, and certainly they wouldn't have been able to predict cryptocurrency back in 1975, in their actual wisdom at the time, so let's just say what the people are not going to be able to do within your IRA account. So I think that when you're considering what are all the different possibilities, what can I invest in an IRA, to simply understand what the things you can't do with an IRA. And the simple two investments the IRS will not allow you to buy are life insurance or collectibles. And collectibles, you include your antiques, alcohol, certain stamps, and certain coins as well. Now, if there are some coins, if they are gold or silver eagles, that are allowable within an IRA account. So when you think back to a single family rental home, a multifamily syndication, a private note and mortgage, a private startup company, all those things are available because they're not life insurance and they're not collectibles. And again, there's so much more other than the categories and the things we talk about tonight. We've had some very interesting investments over the years that people have come to us with that so long as they're not in one of these two categories, your IRA can make that investment. So again, if you go to the code, the IRS code, which I would suggest that you don't do unless you can't sleep, but if you go to the code and look, you're not going to find somewhere where it says you can buy real estate, you can invest in multifamily, or you can even buy stocks or mutual funds. The code simply says you can't buy life insurance and you can't buy collectibles. And the other restriction that the IRS says, they also don't want you using your IRA to engage in a transaction between your IRA or the plan and somebody who they consider to be a disqualified person. So there can't be a transaction in that form. Or they also don't want the IRA owner or a disqualified person for the IRA receiving any kind of benefit from the assets of the plan. And who are disqualified persons? Well, the disqualified persons for your IRA are you and your spouse, your parents and grandparents, your children and grandchildren, and any spouses of those individuals as well. So none of these individuals can transact with your IRA. So if you're looking at using your own IRA in your own multifamily project, that's why it generally doesn't work in that scenario, because your IRA is trying to invest in a project where you're going to be drawing a salary, where you're going to be individually benefiting from that investment. But third parties, brothers and sisters, aunts and uncles are not disqualified persons for your IRA account. So again, that's just when you're dealing with these individuals, make sure you understand how that transaction is going to be structured, because you can certainly run afoul of the rules. But I think in the most part, what we've seen over the years especially in the multifamily, the private placement space, these issues a lot of times don't come up because you're out there networking, you're looking for other individuals, looking for third parties, use their other people's money, right? That's the idea when you're investing, is to look for that other people's money. And if they're not someone that's related to you, these issues are never going to come up. So again, the other arena, if you're looking at investing in real estate, this is why you can't buy a rental property in your IRA account, a property that you want to live in within your IRA account. It's property on the beach, property in the mountains that you want to use as your vacation home, you can't do it. Just very simple. So again, when you're using your IRA, though, if you're dealing with third parties, you really don't have to concern yourself with this issue. And again, we rarely see this come up in the multifamily or private placement space. So people who are looking to get started say, hey, I want to take control. I want to start self-directing my IRA account. How does this work? What are the steps? Well, first step, opening an account. It doesn't take but a few minutes to go through the paperwork to get an IRA account opened, get the documents to us. And then the second step is funding the account. We kind of mentioned earlier, there's the transfer, there's a direct rollover. Depending on if your funds are in an IRA or if they're in a 401k, it's just a different mechanism, again, for a tax-free transfer of funds between that IRA and that 401k. So you have your account opened, you're funding the account by moving money from an existing IRA or 401k. And really the step three, which ironically a lot of times is step one, to be honest with the people that we deal with, is to start investing and finding that particular investment that you want to place your IRA into. And so again, and especially true in the private placements, the syndication space, people will come to us. They have already talked to you. You're raising capital for your project. They've already bought into, hey, yes, I'll invest 50,000 or I'll invest 100,000 into your project. So they've already chosen the investment. You know, they already know exactly what they're going to be investing into. So step three is already done. So they actually then come to Advanta with step one to get the account opened, get it funded so we can make that investment on behalf of their IRA. And that's, again, true in a lot of the different assets we see where people see an investment opportunity, know that they don't want to miss out because they missed out on the last investment that looked very similar. They just weren't ready to move, didn't think they had the funds. They're not going to let that happen again. They just simply choose to use their IRA to make that investment. So again, a lot of times it's people are already aware of the investment opportunity. It's the fact that they don't know they can use their IRA to actually make the investment. Again, that's what I think is so powerful, and what Neal has already talked about tonight. So powerful for people who are looking to raise capital to make your clients aware that this is a possibility, because they already know the investment. They know what you do. They know that you do what you do well and you make money from doing it. They want to be involved. They just don't know all the different places where they can grab the funds in order to make that investment. The IRA is something, again, less than 5% of self-directed 5% of IRA funds are self-directed. So 95% of people who have retirement accounts, some of them may know about it, but most of them have no idea this is even possible.
Well, to add to that, there's so many of our, community members on here that are doing active deals. Well, you realize that I'm bringing Scott in because there are also passive investors on this call that want to learn about self-directed IRAs. How many of you have actually told your investors about IRAs in emails? Have you sent out an email blast to your investors to make them understand this? Have you written a little infographic or a little graphic that you've designed in PowerPoint and then embedded into an email and sent it to them? It is part of your job as a syndicator to educate people on this. And I don't see enough spam, if you want to call it that, from my own students indicating back to me that they are educating their students about the power of this product. You have a database, you're learning from us in other events how to use that database, but I don't think that you're educating them enough about self-directed IRAs. And in my mind, you're just missing out on millions of dollars that really comes to you, and a position of authority that comes to you when you educate them on something that can truly they can benefit from. Because guess if they open up a self-directed IRA account because of something that they read, because they read your email newsletter, you're going to be the first person they're going to ask about investing that money with. And I'm not seeing enough of that happen, people. You're just missing out on something that's easy money that's sitting there on the table and you're not using it. So I want to keep emphasizing this. I know I'm repeating it, but this is important stuff.
No, and I think that's excellent point, Neal. And I have a couple follow-up thoughts on that too. Number one, the millions in IRA, actually the number is $8.3 trillion in IRAs. That's not even counting old 401ks, but it's $8.3 trillion in IRA accounts.
Wow.
That are out there. And again, if somebody has an IRA, all they have to do is say the word, and they can make the investment with you with their IRA. The second thing is, you mentioned I like to use it as a case study that we had years ago. It was a private startup company. It was a private startup insurance company that were doing multiple capital raises. And at the end of their first raise, they had a few people that knew about Advanta, and they a couple of people came to us, used their IRA to buy some of the stock in the startup. And Neal, just as you said, when they came time to do their second capital raise, the CEO, the COO came to me and said, "Hey, we had a couple of people use their IRA accounts in the last round to make this investment. Would you mind if we included some wording? Would you help us write a sentence or two in our next offering letter to people, letting them know they could use their IRA?" And I said, "Sure, no problem." And we included some information. They had about 5 investors in their first capital raise. The second time when they went to do a capital raise, they had 50 people just using their IRA account, because the people just didn't know this was an option. So,
Yep. I read investment decks. I need investment decks that are beautifully designed with page after page after page, and the word IRA is not mentioned anywhere. And when you're doing that, you're doing yourself a huge disservice. In my mind, as far as I know, I have never done a presentation for my investors where I did not mention that IRA funds can be used. And I do that even though I'm doing presentations like this with Scott and doing multifamily fundamentals webinars which mention IRAs. I'm doing it continuously because the goal is not just to tell people about IRA, the goal is to remind them about IRAs. Because not everyone is going to jump and go get a self-directed IRA the first time and the only time you tell them about it. You need to be continuously reinforcing that this is something that they haven't done. The money's already sitting in their 401k or their regular IRA, but they haven't switched to that self-directed format yet. So they do need constant reminders from you. It needs to be in your pitch deck, and it absolutely needs to be in your email newsletters.
Yeah, and again, the last point I'll add to that too, Neal, one thing we can do at Advanta, again, we cannot endorse an investment that you're selling. We can't sell the investment for you. We can't vouch for the investment. All we can do is hold the investment. But what we can do is try to give you literature, give you materials, and I'll talk about that here more towards the end as well, to try to give you as much information. If you have trouble designing a flyer or designing something to stick in an email or stick on your website, let me know and it will help get you that type of a document or maybe a private page that we can help develop for you to tell your clients about IRA investors, do self-directed IRAs. So please, anyone who's listening on the webinar, my contact information will be up here again at the end. Reach out to me and say, hey, I'd like to find out more about what what we can do within our constraints to help you raise capital.
I'm gonna throw my hat in the ring there as the first one. I'd love to see what kind of collateral you've got that I can use to enhance my offerings.
Absolutely, Neal. We'll get that to you tomorrow.
Wonderful.
So we're going to go through a case study, kind of illustrate two different ways people invest, I think, in real estate, primarily that we see. And in both case studies, we're going to center it around a fictional, somewhat fictional person. It's probably not, it's a made-up example, but this is a made-up example based on all the years I've been doing self-directed IRAs. So this is a very common scenario. Individual has a former 401k plan, again, or maybe a couple IRAs out there that they're just sitting there looking for other investments to make. And in this case, client John realizes, hey, I could take this money and buy a rental property. I could lend money to other people. I could invest in a multifamily property using the IRA account. And he realizes when taking the classes that if you do invest in make an investment with your IRA account, any income from that investment has to go back to your IRA. So whether it's a stock dividend, a multifamily dividend, a monthly rent check from a tenant, all of that income has to go back to the IRA. And any expense related to that asset gets paid out of the IRA account if the IRA owns that directly. Again, our role at Advanta is to hold this asset on behalf of his IRA and do all the record keeping for his IRA. So if John wants to invest in a rental property or invest in a multifamily property, our job is to make sure that the asset gets titled correctly, and then we will receive and deposit the funds back into his IRA. And again, as I mentioned earlier, the client is always responsible for doing the due diligence on the investment that they make and choosing, obviously, what investment they want to make within the IRA account itself. So again, going through a quick case study, maybe of someone buying a single family rental home, John opens up his account, fills out the paperwork with us to get the IRA opened, completes forms to roll over a 401k into this new self-directed account. And so our job at Advanta initially is to establish the IRA, receive that incoming rollover. Some of the benefits of investing in a single family home, obviously John is in greater control over the actual investment, the location, the terms that he's buying this particular investment in. And again, the profits are all going to come back to his IRA account. He's dealing with just one tenant, one structure involved, and doesn't have any other partners and investors involved unless really he wants to partner along with them. So for some people out there who are not really looking maybe to network or to really expound a whole lot, the single family home rental may still work well for them because it's just a very micro, small investment. They just do it on their own. They're in complete control. So John wants to buy the property. It's, again, the key thing for Advanta anytime we make an investment for a client is that the investment needs to be titled in their name of their IRA. So when you're buying a single family home, the contract and ultimately the deed will be titled as Advanta IRA for benefit of John Smith's IRA. And this, again, is something that we do and work with the client on up front, making sure the investments are already properly titled. So he buys a property for $150,000. He rents it. Over the course of 3 years, he's got the accrued rents, the net rents, all back into his IRA account. So he's earning a little bit of nice cash flow back to his IRA account. But again, if you're going to own rental real estate in IRA, things to remember, the IRA has to pay for all repairs and expenses and will receive all sale and rent proceeds. So you need to make sure for your IRA account, you are limited to whatever funds you have available to you. So you want to make sure that you use those diligently. You don't overextend yourself. So you want to make sure that you always will have enough income to support those expenses. And John also is going to have to make sure that he's going to have to find the tenants, deal with the maintenance items, make sure he doesn't do anything prohibited, like performing any of the maintenance services. If he were to work on the property himself, that can constitute a prohibited transaction in his IRA. Now he's ruined his IRA account in the eyes of the IRS, which will now immediately tax him for his IRA account. So if you're owning rental real estate, there's obviously some benefits, but there's also a lot more responsibility as far as, again, you're finding your own tenant. If you buy a rental property and your tenant is missing or you have a vacancy for a month, that's 1 month of lost income that you're not going to get back. You don't have other tenants to help make it up, as you see more in the multifamily space. So kind of contrasting a single family rental home investment with investing in a multifamily syndication. In this case, John, rather than going out and looking, scouring the neighborhoods and looking for a home that he can purchase, instead meets another individual, Randy, who has a private offering. He's going to purchase and remodel an apartment complex. And Randy, as the person who's raising the capital, has a subscription document, a prospectus that lays out his plan for not only purchasing the apartment complex, what his plans are for rehabbing, renting it, and ultimately giving an expectation to some extent of what those returns are going to be to all the different investors. So again, at Advanta, we're not going to read the subscription document. We're not going to read the prospectus for suitability. It's be completely up to John to determine really whether or not this is an investment he wants to pursue in his IRA account. And I think the benefits, and Neal, you can certainly speak more to this as well, but the benefits of investing in these types of multifamily projects, John doesn't have to find the tenants. He doesn't have to deal with the maintenance. That's something that Randy and his team are going to go out and find. And again, the vacancies, if you have a 30-unit apartment building and there's a couple vacancies in that particular unit, the rest of the units are still churning income on a monthly basis as well. It's not going to have the effect on the overall returns to the investors that it would have if John invested in a single family home and his tenant moves out and he's got to get somebody back in there within a month or lose any more rent. Typically there's professional property management in place that is taking care of those investments as well. So John doesn't have to worry about it. And I put the last term there, mailbox money. It's one of the favorite terms that one of my favorite clients uses at times. He's been investing in different multifamily and apartment complex situations for years. Puts 100,000 here, 50,000 there. And he says he loves the first day of the month. He just goes out to his mailbox. The checks are there to deposit back into his IRA account. So he calls it mailbox money. He doesn't have to deal with the tenants, doesn't have to deal with toilets, all those headaches. He just is a passive investor in that particular project.
And I think that's the true power of multifamily. When you look at the fact that, folks like me, I spend about 6 hours a day somehow being involved in the operations of my property, right? Of my properties. And when you compare that to someone who has a full-time job that might spend 6 hours a month, what chances there that he can actually do as much that I do in 6 hours a day? He can do that in 6 hours a month. That's really where professional management comes in. That's really where metrics and processes and audits come in. And that's why I think that we're able to get significantly better than average returns for our investors.
Absolutely. Yep. And so instead of the first case study, John is working on the contract and closing documents, to show his IRA. Because again, our role at Advanta is if a client comes to us and says we want to make an investment in our IRA, our job is to make sure that whatever investment documents, the titling, the ownership must be in the name of the IRA. And contrasting with buying a single family home where you're looking at a contract and deed, in this case, John is going to be investing into the private placement. And so the subscription documents that want to know the name of the subscriber, the tax ID number for the subscriber, the accreditation status of the investor, we will work with John to make sure those get completed correctly. And again, in this case, the subscriber is not John Smith personally, but Advanta IRA for benefit of John Smith's IRA. So it keeps his account tax protected. This demonstrates to the IRS that the investment into this multifamily project is being made by John's IRA as its own entity, not John personally. We use our trust tax ID number, not the social security number. So all of the reporting of the income and the dividends is coming back to the IRA account. So none of this is getting reflected on John's individual tax return. So we will make sure John approves the documents. Ultimately, we will sign the subscription documents on behalf of the IRA and wire the money to the particular fund. And going forward, the future dividends or profits are just sent to deposit right back to John's IRA account. So again, the income, the gains to his IRA not included in his income. When he exits the investments, exits the investment, all the proceeds come back to his IRA. No tax consequence whatsoever to John. He's simply taken his IRA, put a $50 and $150 or $100,000 into the investment. All of those gains simply come back to him. It's like investing almost in a mutual fund to an extent, where you're putting money in and getting these fantastic returns back to your IRA account. So that's, again, the case studies really showed it from the perspective of the IRA owner themselves, what process they have to go through to get their IRA invested. It's not difficult at all. We make it as easy as possible on, again, the client and you as well. But I think some of the reasons why IRAs are such a good capital source, to raise capital, number one, it's repeat investors. So if you're already raising capital from a number of individuals who are not using their IRAs, as I mentioned, that example I had with the private insurance company, they just simply sent a letter out to a lot of their existing investors and said, hey, we have another round of capital. We have another round of capital raise that we need to make. Here's another way you can make that investment. You can use your IRA and realize all these tax benefits. So you can just go to your existing investors. If you haven't talked to them already about using an IRA, you're going to have people that want to use their IRA to make the next investment with you when you share that information. Another reason, people are not really expecting to use their IRA funds soon. If you have people who are in their mid-40s, early 50s, mid-50s, they're not really planning on using their IRA for probably another 15, 20 years at minimum is when they're actually going to touch their IRA. They think, hey, that's money, I have to put it away. I can't touch it. So they have separate rainy day funds. They have separate savings accounts. So if they were to lose their job or have a financial issue, that's where they're going to most likely draw their money from. So some people don't want to touch their savings accounts to make this type of an investment, but they're perfectly willing to use their IRA to do it because they weren't planning on touching that money, especially during your 5 to 10. If you have a 5 to 10 year time frame on your investment, they weren't going to touch the money until much longer than that anyway. So I think you find people more likely to use their IRA accounts sometimes than their savings accounts because they're not planning on using it.
I want to stress that. I've seen some investors that when they're giving you $50,000 in cash, they're far more circumspect than when they're giving you $100,000 in IRAs, because that cash is not something, that IRA money is not money that they can use immediately. Another example tied to this red box on the right is that if you do a new construction project, if you do a land project, you will find IRA investors much more willing to invest, because new construction projects typically offer significantly higher returns, right? But there's no cash flow for the first 2.5 years because you're doing all the land remediation, the zoning, the entitlement, then you're doing the construction, then you're doing the lease up. So they're not making money for 2.5 to 3 years. Now you would have huge amounts of trouble getting money from investors who are not going to see any cash flow for 3 years. That's why for our new construction projects, we often have projects where 50% of the money, 50% of all of the money that's coming in is IRA money, because the IRA investor is just very sensitive to the overall profits and not sensitive to the cash flow, because if there was cash flow, it would have gone back to his account anyway. He wouldn't have been able to use it. So keep in mind that for those of you out there that are looking at opportunity zones and doing new construction projects, you know, IRA funds are you can't double use opportunity zone tax benefits because they already have tax benefits with IRAs, but it's easy enough for them to cut a check for you. And it doesn't have to be in an opportunity zone. If it's a construction project, you'll find that IRA investors are much more willing to put money into it than investors that are using cash money.
Absolutely, absolutely, and that's again something we've seen the same thing you've seen over the years, Neal, too. You know, and I think another unfortunate reality is people who are afraid of the stock market at times end up, you know, taking their IRA, their 401k out of any type of risky situation. They'd stick it in a CD or a money market at a bank, and they're getting 1 to 2% because they think their alternative. It's I can earn 1 or 2% at the bank and not lose, or I can put my money in the stock market, maybe win, maybe lose, but it just makes me too nervous. So a lot of people don't realize that the investments into a multifamily project are even an option. But when you start talking to them and say, yeah, I know that you do well. I've seen the projects you've done. I've heard you tell me about them in the past. You know, what do you pay your investors? And my investors get 8, 10, 15%, et cetera. That sounds obviously a lot better to someone who's got their money just sitting, earning 1 or 2% that they know is not a long-term solution. The people with the money in a money market account earning 1%, they know that they're not keeping pace with inflation. They just are too afraid to put that money back in the stock market. But you show them the financials on a multifamily project that you're doing or another investment opportunity, that potentially then be another reason why they would want to invest. Hey, that looks like a pretty solid project. I can do better than that 1 or 2%, and I can still keep my money out of the stock market. And one of the best reasons I think self-directed IRAs are also a good capital source is there's no outside approval needed. So again, if someone has an old 401k or they have an IRA account, if you're raising money from them, there's no bank you have to go to get approval for the loan. Other have to get an approval from the financial advisor, et cetera. It's simply the IRA owner that decides, I want to make this investment. I see the benefits of it. Let's do it. So you're dealing one-on-one with that individual, maybe a spouse as well, to get them both on board. But it's not a situation where you have to go through 3 layers of red tape and fill out a bunch of documents. It's simply convincing that other investor that they can use their IRA. And once they do it, it's simply a matter of paperwork. We're not going to put up any roadblocks. We're going to try to make, again, the process as easy and simple as possible for your particular investors. So again, why do I think why do people use Advanta IRA? We don't have a lengthy approval process in your paperwork. If you have a subscription document or a private placement document, again, our role, if you go back to that case study, is to make sure that John's IRA in that case study just gets titled correctly on the documents. We're not going to review the private placement for suitability. We're not going to have our legal team go through with a fine-tooth comb, which some brokerage firms at times will say, oh, we can handle some of these types of investments, but you need to send it to us, and we'll send it to our legal department, and we'll let you know when we hear back. And it may be a few weeks or a few months before they ever get back to you. That doesn't happen because, again, that's not our role in the process. We've been working with private placements for years. We give everyone a private account manager, and again, that extends not only to the individual client who has one point of contact, but also to anyone who is a referral source and is sending us repeated investors. We will keep you with that same person in our office. Just makes it so much easier. It keeps it streamlined to help. Again, we look at it from our perspective of you've done the hard work of convincing someone to take part of their retirement account and invest with you. The last thing you need is for someone like Advanta or a self-directed custodian to make that process more difficult and have your investors start questioning whether or not this is the best way to go for them. So we make it as streamlined and easy as possible. You tell the client what to expect. We deliver on that promise as well. The client and investors getting told the same thing every step of the way puts them a lot more at ease. We use DocuSign a lot with our paperwork, and we have flat administrative fees. If someone's investing $50,000, $100,000, $500,000 with you, the fee for all of that is the same. It's the same amount of work that we're doing. It's just a different dollar amount. So if you have investors, we try to keep our fees down when it comes to that. We charge less than $300 a year to hold that asset in that retirement account, do all the reporting that goes along with it. And again, that's regardless of the value of an account. It's a lot of other custodians out there in self-directed world base their fee on the value, whether it's one asset or 10, it's the same fee. So we try to develop some things to be more fair over the years. So again, my contact information is on this last slide. I'm not sure we have any questions, Neal, but I want to put this out there again. I mentioned earlier, if you would like some information, give some examples of some of the things that we can help give you, some of the tools that we can give you, the things that we can design for you, so that you can put that out to your investors. We want to help educate, obviously you, but educate your investors as well and give you those tools. You don't need to be an expert. Obviously, Neal's been dealing with self-directed IRAs for a while. He's very knowledgeable on that concept. But if this is something that's newer to you, you're going to want to have a little bit of backup, some other information. And you don't have to learn all of the ins and outs of transfers, rollovers, IRA contributions. Leave that to me. Let myself and my team address that. But let us give you the materials to help you find those clients and educate your clients and investors about self-direction. So please reach out to me. That phone number, that email address. I'll be more than happy to give you what I can, get you some examples of what we can do for you, and would love to be a partner. And Neal, like I said, I don't have any questions or not, but I want to thank you obviously for the time tonight and addressing this audience.
Well, I did put up a quick poll. This is a very, very quick poll just to see who's interested in using, other people's IRA funds to buy real estate. I'd love to see that. I'd love to also see if you already have a self-directed IRA account. Please let us know. So quickly take a look at the poll. I have a couple of questions here. The first one is, can the presenter briefly discuss the tax implications when investing in a real estate deal that includes leverage?
Yes, that is if you're using an IRA to invest in a project where leverage is involved, you can subject the IRA to what's called unrelated business income tax or unrelated debt financed income tax. It's not prohibited for the IRA that happens with an IRA account, but essentially whatever percentage of financing is in that deal, that percentage of your returns can be subject to that UBIT or that UDFI tax. There's some ways you can to avoid tax. If you're using a 401k plan or if you're self-employed, you can use a solo 401k plan. Those types of plans don't even pay that tax, so that would eliminate it off the bat. As well, you can also, if you're doing, say, a single family home with financing, you do get to take depreciation and other deductions to help limit how much that tax will apply. So this is not a tax that we will calculate for you. You would need a CPA. Certainly, we can refer people to you help with that. But that is something to consider, obviously, if you're investing in a project where there is some leverage.
Got it. And are there transactional fees every time a deposit is made from monthly rents?
There is not. Nope. Our annual fee, it's a flat $295 a year, covers all of the deposits we make into the account, any checks that we need to write out of the account. There's no additional fees for that.
If you're already retired, can you use the proceeds from your IRA? What are those cutoffs and dates?
Absolutely, and that's an IRA distribution question. Once you're over the age of 59 and a half, whether you're retired or not, you can start taking money out of your IRA without penalty. If you're under 59 and a half, the IRS will hit you with a 10% penalty. But once you're over that amount or over that age, you can pull money out, again, whether you're retired or not. And we have a lot of clients, Neal, that do that. They have their investment into a private placement. They get their monthly dividend or rent check back to their IRA account, and we just turn around and send it right back to the account owner.
Got it. I have someone asking for my information. The easiest email address for me is Neal, that's Neal, the Irish spelling, at multifamilyU.com. That's Neal at multifamilyU.com. Please check out multifamilyU.com. This is our third webinar this week. So we've been going at a webinar a day this week because we're looking to educate our community, both the people that want to be active and the people that want to be passive. You're welcome to reach out to me. I love chatting with people and actually spend about 2 or 3 hours on the on the phone chatting with various investors and partners. So I'd love to do that. And thank you for answering our poll. Yeah, we want to wish all of you good night. Thanks for staying all the way through to the end. Have a wonderful evening. And thank you, Scott.
All right, thank you very much, Neal.
All right, bye-bye.